Hello everyone, welcome to the Ichimoku charts.com daily analysis for the Aussie dollar US dollar FX for Monday, July the 9th, 2012. Well, a continuation of the trend to the downside today, a candle with a lower high and a lower low. White bodied candle, however, and previous days trading we had a very large black bodied candle denoting the sellers making a very large amount of net bearish progress. Today the buyers have made net bearish progress a small amount, but the story here is that the sellers have lost quite some downside momentum. If we look at the shadow on the bottom of this candle, the market interacted roughly with the previous support area and previous resistance area around 101.44, and we've seen upside price rejection from there. We've seen the buyers come in and the sellers lose commitment around that area. Previous day's candle we saw the sellers lose commitment, and for today's trading we've seen the buyers take control of this market, and it does set the market up for a potential change of trend. This looks very similar to what we've seen with the equities market, with the S&P 500, and we have a 1 or 2 day downtrend in place, and a type of Japanese candlestick reversal pattern, a hammer type pattern, although we haven't had a strong establishment of the trend to the downside, but the ramifications of this type of pattern are the same, that there is potential for a change of trend, and it's because of the small body in the candle and the sellers losing commitment to the downside because of that small body, and the large shadow on the bottom, once again a loss of commitment by the sellers. If the market is going to change of trend, there is potentially strong resistance at the 102.18 level, so we do need to watch that, a previous swing high within the cloud here, and below there we do have once again that strong support level at 101.44 if the market does continue trending down. Now, in terms of the Fibonacci extension, we're examining the first time frame downtrend that the market's in at the moment to the previous time the market was trending down, and here we see the market interacting with the 61.8% level. Previous day's trading we saw price rejection below the 50% level, extending down to the 61.8%. Today we've seen the market extend down through there and be rejected from there, so that does set the market up for a strong change of trend to the upside. And examining the Fibonacci retracement of the prior uptrend, and here we see the market failing to close down below the 38.2% level. For the previous 2 days we've tested below there, and even today we've tested to the 50% level, and we've seen strong rejection from there, and once again that does set the market up for a strong change of trend. Now, just looking at the Ichimoku as well, we have a market that's bullish in all 3 time frames. We're trading above the cloud, so the market is bullish in the long term time frame, trading above the Kijun-sen, the pink line here, so bullish in the medium term, and bullish in the fast term time frame by trading above the Tenkan-sen. The Chiká span here is above the corresponding price action, so confirming this bullishness that we're seeing in this market. And just looking at this market, we are in a second time frame uptrend. Here we have the market making a series of higher peaks and higher troughs, and this, the way the market is set up here, looks to be one of those intermediary troughs, and if we do see the market change trend to the upside, we could see continuation of that trend to the upside, and perhaps the market even take out the peak up around the 103.29 level. The market did find support at the Tenkan-sen here, and that's very important. It will offer support over the next few days, and the way that the current candle is developing, it is bearish at the moment, and we should be looking to that level as potential support, and then the 101.44 level, of course. Looking at the Kijun-sen as well, that's pointing up fairly sharply, and it's reflecting the strong upside momentum that the market had built previously. And even though the market had retraced over the previous couple of days, it failed to change the angle of the Kijun-sen, and that does suggest continued bullishness if the market can trade up through the 102.18. So moving forward tomorrow, strong support at 101.44. If we do see the market trade below, we have no major support until the market trades down to around the 100.74 and then into the cloud, but certainly 102.18 is crucial to a change of trend and a potential for the market to test up to the 103 level.